I'm going to say a lot of stuff on here, obviously, today, but I think there's two things that really, the two take home messages here is that bad news has become bad news again. Everybody now is looking at the Fed as if they made a policy mistake, right? So those are the two real take-home messages out of everything I say here. That's clearly what's going on. S&P 500 is off to the worst start, worst August since 2002. SPX and NDX are down for 3 straight weeks. Dow and Russell 2000 had their positive streaks broken. Powell said that the Fed could potentially cut rates at the September meeting. Obviously, they didn't do anything yesterday. And look, I mean, 69.5% now chance of a 50 basis point cut. I've changed that about 7 times over the last 12 hours. I mean, it has moved around that much, right? It was literally like 11% a couple days ago. Now we're at 69.5% chance of a 50 basis point cut because again, markets are looking at it as if the Fed made a mistake by not doing anything recently. Microsoft, Amazon, and Apple, I mean, they all had some interesting moves on earnings. Apple, I'm not even sure where it's trading right now, but clearly they didn't save the market last night. Meta performed well, but, eventually, tough day yesterday. I mean, they were up at I think at least 10% almost yesterday.
520. Yeah.
Yeah, and then ended up fading throughout the day as the market just kind of sold off there. So we just had non-farm payroll. Missed to the downside, and unemployment rate rose to 4.3%. Again, one of the things I think we've been looking at for the longest is, will the Fed be cutting for the good reasons or the wrong reasons? And now it seems like they're about to cut for the wrong reasons, I guess, or not good reasons, I should say, such that the NFP is not going well, and we still kind of have inflation kind of in the system, and it's although it's fading, it still exists. So we got a real complicated situation here in the economy. VIX, of course, is now above that long-term average of 19. When we came in this morning, it was 1850 and change yesterday, jumped up this morning as markets are falling. And the one thing I've really been watching throughout this sell-off is, are we in backwardation yet? We're really close. We're really close at this point now.
Well, you got that election bump that's kind of throwing everything off, because it's been trading at 18, 19, 20-ish volatility in the November cycle for quite some time now. So it's kind of, you get this kind of pop in volatility, but then the back months are more normalized. I wonder if everything's going to get much higher, or if that one will come down. It's a tough question.
Yeah. It's a tough question. So I always like looking at volatility in this way. This is volatility risk premium. It's something I kind of learned from being at SIBO. They would always kind of put in these terms. Difference between forward-looking vol and backward-looking vol, right? VIX versus minus historical. The thing is when this thing is rising, when it's above 4, 5, 6, it's kind of gives you an idea of how much you can actually harvest volatility, selling how much implies is trading over. So I have on the left here, implied is much higher than historical when it's up in that area. When historical is much higher than implied, which is kind of, we're closer to that than anything, meaning vol might be high, but things are moving around so much, you're still losing, right? And so that's kind of the territory we find ourselves in right now. If this thing is below 0 or even the negative territory, right? For example, COVID, this thing was down like to 9 or -9, -7, something around that point, right? Like historicals are just trading that much more over implied vols, even though volatility was high. So that's not really where we want to be. And so I always kind of look at this, but this, right now you can see it's around 3 or so. Again, the lower the number, it's not necessarily great. Even though vol might be high, it's kind of hard to make money because things are just moving around so much.
Makes sense with all the earnings that we've had over the last week or so.
Just looking at some across the board, some of the other things that have changed. Just look at this past month. You got XHB, the regional banks and KRE. You got the REITs, you got the yen. See, these are some of the things that have been in positive territory the past month. Obviously, IWM was as well. Of course, it was making that big run until it's been getting shellacked the last couple of days. Oil, SPYs, and Qs, of course, been negative territory. So just big change in the markets more recently, right? As we all kind of know and experience now. Of course, a lot of this is turned to the downside as the correlation starts going to 1 because it's a strong sell-off. But wild market right now. Wild market.
Yeah, a lot of these things like XHB and KRE have had significant rallies. So, not shocking to see a little bit of a pullback there. But yeah, there's not many times where you get a 5-10% move in the NASDAQ to the downside, at least in recent memory.
Yeah, IWM, the Qs, both trading like single name stocks, especially IWM. It's just flying around.
Yeah. Seriously. You mentioned earnings, and it's a good point because earnings, this has been the most volatile earnings season since the global financial crisis. Global financial crisis is not on this chart. This goes back to 2014, but just looking at the moves, the percent moves in the S&P 500 for names on average, and yeah, up at 5%. Another one I highlighted is 2022, the second quarter. I remember you remember that time period. 2022 was that time period when we were moving down, they were raising rates, and you could see that was upwards of 4% and change. But yeah, this has been a very volatile earnings season.
Some of these companies are like Amazon missed and they had weak guidance. Apple did not. Both of them are down. Amazon's down worse. Coinbase had great earnings yesterday on the back of this Bitcoin move to the upside, but
basically unchanged,
basically flat. So it's like yesterday it was almost impossible to have a big rally.
Yes, market sentiment certainly weighing on some of these earnings.
Absolutely. Bonds, man. 10-year Treasury falls below 4% for the first time since February. The 2s10 spread close to flat. We've been hanging around like inverted negative 30 to 40 basis points most of the year. Obviously, it's changed a lot recently, and now we're almost at flat. Most of the yield spreads we look at, whether it's 30s and 5s or 2s and 10s or with 30s and 2s, all really like inverting, right? Really strongly more recently. So steepening, excuse me, more strongly recently.
Isn't this supposed to be good? Low rates, get cash.
Supposed to be, right? I mean, it's supposed to be. Isn't the Russell 2000 supposed to keep going up because we're supposed to be cutting rates, right?
Yeah.
I mean, this is the kind of market we're in right now.
Yes.
So, that being said, it just kind of, that's the great thing, about us and duration and where we're always looking a little bit further out. Because these type of things happen, market's a little crazy right now, and it might be a couple of days to a week or two before things kind of reset. Hopefully the big selling is done. I mean, honestly, that was my sentiment yesterday. Let's just go ahead and get the big flush and sort of, get that over with. I think we needed that. Hopefully that's what's happening as we sit here. Hopefully things start to change. Again, this has been a huge week, and we knew that coming in. Last Friday, Josh and I were on Engineering the Trade, looking at the SPX and the expected move for the week, and I think it was about 2%. Well,
yeah, about 100 points, which was like the highest we've seen in months, if not years.
Yep,
and
exactly.
We've gotten 400 points.
Yeah.
A little bit of realized volatility in this market.
A little bit. We totally did. I mean, huge. NVIDIA is about to probably get a little crushed. It's starting to get kicked. The DOJ antitrust probe just came out over market dominance in developing chips. If you ever pay attention to hedge fund dudes, Elliott Management just came out and just kicked it in the face as well. So it's probably going to get tough in that name right now. Bitcoin has been seeing weakness, although it's turning around. But the point is here, it's becoming a political trade, it feels, right? At this point, it's becoming a kind of a political tool in a way, and you're starting to see it move around almost in lockstep with how the odds are changing in the race for presidency. So something to keep an eye on there. Dollar ebbed and flowed with markets this week, of course. So here's the deal, dude. Like, this is where, I think is really going on in the scenes. If you look at all the currencies, obviously most of them have been bid. Bank of Japan, we've seen the run in the yen. They hiked interest rates for just a second time since 2007. Bank of Canada cut rates. Bank of England cut rates. I mean, we're the only ones who haven't. So obviously that's what's, something that's taking place here in this market.
Is this the bottom? What do you think? Can you buy them here or at least sell some puts, start getting into some long delta?
Do we get to 5,000 or 6,000 first?
Right,
5,000 or 6,000 first. Oh, geez. Oh, man, that's a good question. What else do we have? There's really not much going on next week. We got a CPI number, the 12th or 13th or something like that. You know what? Unfortunately, I would say 5,000 before 6,000 first.
Ooh. I was going to go the other way. I was going to say maybe it's not over, but I think you start getting a little long delta here.
Now, that said, it's about the fashion in which we do. I don't think we're going to tank for another 400 points in like a week. You know what I mean? I don't think that's coming, but I think this has been a little psychologically damaging.
For sure.
I think, some people might want to go to the exit right now, but I don't think it's going to be super volatile. And I don't think we get like a 30 VIX. I don't know. 6,000 is a little tough right now to turn around. after what we just came through and how much things have changed for rates. That's the big deal.
That's Super Bowl Mikey. He he's setting the bar pretty high.
You know my answer.
I hope you're right.